Hey everyone, it's Tom here, and today I'm going to talk about a few areas that traders often overlook, I think, when they're trying to improve their trading performance. And I don't want to call these like cheats or shortcuts or anything, but over the years, when I've worked with traders who are struggling, I tend to see the same areas come up again and again where maybe traders think I'm just going to overlook that because it's not really important or it seems like a bit of effort. Whatever the reason is, these kind of things tend to get neglected. They're not going to be the holy grail to solve your trading, but they're going to put you in the right direction, if that makes sense. Just a few areas that I think for every trader, there might be some benefit in looking at these, definitely. And hopefully you'll see what I mean as we go through the video. So yeah, with that being said, guys, let's get started. Just very quickly before we dive in, if you're still struggling with your trading, or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that'll map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So the first thing that I always see traders struggle with, and I say neglect, is relying too heavily on the information that your broker gives you in terms of your trading record or your journal, so to speak. It's easy to do because most brokers will have like a trading record system that you can download, but a lot of traders just struggle really to analyze that in detail because the information you get from your brokers not that great, to be honest. So I use IG as a broker. I have done for quite a few years now, and even when I just started with them, the first time I tried to get my trading information, it's very limited in terms of what you can see from that. And that's not really a fault of IG necessarily. It's just the information that's going to be most useful to you from a trading record isn't going to be something that your broker can provide you. We can have the entry time, the entry price, the profit and the loss, all that kind of thing. That's all right, that's there. But it doesn't have your observations for the trade. It doesn't have areas that you could improve on the trade, and therefore it's missing a lot of the key information that makes a journal worthwhile. So in comparison, I'll pull up here on the screen kind of the style of the journal that I use. It's not perfect by any stretch, absolutely not, but it has the key information we've covered there, the entry point, the result, etc. It makes it easier for me to go back and find it on the chart, but it also has basically my observations, my thoughts during the trade. And even though I'm trading fully mechanically, it's still great to have that in there because when I come to review my trades, and we'll come on to this in a second as well, it gives me what I was thinking at the time, and therefore I can assess my behavior a little bit better, not just the behavior of the market, if that makes sense. And that really takes me on actually to point two. But first, just to summarize this, we want to make sure that we keep our own trading journal. That's kind of the key point. Don't rely on the information you can download on your trading record from your broker, because when you come to review it, it's incomplete. It's not going to be as helpful as it could be, and you're just going to be wasting your time there. That neatly brings me on to the second point I wanted to cover, and that is that far too few traders want to look at improving and understanding the data that they've gathered and using that in an effective way to try and improve their trading. Quite a lot of traders will essentially just stumble around in the dark. You'll strategy hop, you'll change markets, all those kind of things, looking for an easy win. It'd be like going to the casino, sitting down at a slot machine. You press one of them one time, it doesn't pay out, it doesn't win. You move on to the next one. Eventually, probably not a great analogy, but eventually the slot machines will all pay out as a win. And you just hopping around might mean you're just going from loss to loss to loss there without doing some analysis. Now, if we're looking at it in terms of trading, obviously, with an effective trading record, with an effective journal, we've got the secret there to show where can we possibly improve here. We've got all the information we really need to have a look at areas that we're doing well and areas that we're not doing well. And it drives me mad a little bit when I speak to traders who've gathered a load of trading information and they think that that's the key, just writing it down in a journal. Well, you're going to have to use that journal for something. And so that's really the second point. It's when you've got an effective journal, when you've got a great trading record, especially, as we covered in point 1, with your observations in there that you can learn from in terms of experience. Use that, review it, go through the data, because that's going to unlock areas that you think, oh, I never would have thought of that. Look through your winning trades. How much more could you have squeezed out of that trade? Are you repeatedly just giving up profits too early? Or the other way around, your stop loss too wide? Is it too tight, etc.? Look at things. We've covered it on videos before, the MFE, the MAE. If you haven't watched that video, be great to understand how to kind of analyze a journal in detail. But overall, though, use the information that you've taken time to gather and put it to good use. Looking at the improvement concept in a little bit more detail, and this is something that if you've spoken or worked with big traders before, quite a lot of them have done this. I don't think this is too much of a secret, but it's a basic area that can really make a difference. It's have just a sheet or a record specifically for the errors that you're making as well. So make a note of where you're messing up repeatedly. Could be, missing trades, getting into trades late, incorrect risk management, all those things that can either ruin consistency or performance and ruin your track record. Have them just literally on a physical piece of paper and tick it every time you make a mistake. And then at the end of the week or the end of the month, find out the one that was the kind of you made the most errors on, and focus on putting together a plan to fix that. Say to yourself, okay, I'm missing these trades. Why am I missing the trades so often? Is it because I'm trying to trade too many markets? If that's the case, okay, we drop the markets down, we gradually build it back up. Is it because I'm too distracted by something? It might even be your phone or whatever. Well, again, put a plan in place to focus solely on the trading when you need to. Is it because I just can't make that time of the day consistently? Okay, have a look at another session or find a different type of strategy that you're going to be able to trade consistently. Is it just emotion? Is it fear? Is it greed? Is that stopping you from placing trades or placing too many trades? Well, that's a case then to just dial it back to, say, a demo account where there isn't money on the line. Get yourself comfortable with getting consistency that way as well. There are a lot of areas like this that traders can struggle with, but there are also just as many answers in terms of how we can review and improve those areas and remove those mistakes. But the key point is to have something there to really dial in and find out the errors that you're making as a trader. And just having a piece of paper, it sounds really basic, I know, but just having a piece of paper with those errors written down on, put a little cross, put a tick in it every time you make one of those mistakes, review it on a regular basis, and assign yourself a target to improve based on the most common error. So another basic area that I see traders struggle with is jumping in with large accounts or trying funded tests too early. Now, we all want to make money, that's one of the core reasons why pretty much every trader begins, but you want to take your time with this. And I know that sounds obvious, but funded tests aren't free most of the time, and we should treat them as an investment. We should kind of take care to prepare for them properly. It's no use just rolling the dice and going, I'm just going to take one now. We need to do preparation for these kind of things. In the same way as if you're trading with a larger account, you'll have heard people say, if you can't trade with £1,000, you can't trade with £100,000. And that's true. The emotions are just going to increase as your account gets larger and larger, and learning to manage the basics of trading on a smaller account is going to set you up in the long run for a larger account. So whether you are going for your own capital or going for a larger funded account, take your time. If you're doing a funded test, practice, have a few dry runs at it, essentially. You know what you need to achieve on the funded test, so do a few runs, see how close you get to it, see how you manage with the pressure, the expectation there, and obviously the commitment to sitting down and trading. It's something that a lot of traders do overlook, and when I speak to traders who failed 3 or 4 funded tests, it's usually because they jump straight in without any prep, hoping to get fairly lucky and pass it, and that's not the way that's going to lead to long-term consistency. Another area that, again, might seem really obvious, and I've mentioned this on videos before, but it's how you trade and the devices you use. Now, we all can't have like a desktop PC with 8, 9 screens, etc., and that's absolutely fine. But in the same way, we don't really want to be giving ourselves a disadvantage by trading on something like a phone as our main tool. It's just going to be too limiting for you, basically. You can execute basic things on most trading apps, and you can check your trades, but doing analysis, doing back testing, you're going to need some form of device like a computer for this. you're not going to be able to do it on a phone. And even on a tablet, it's just too tricky. So bear that in mind. Even a really low-cost laptop will do, because you'll have access to the programs that you need. You'll have access to pretty much every trading broker that you need as well. And, you're not limited by the fact that those apps are just there really to allow you to perform basic functions and check the market. It's okay for placing trades, but overall as a trader, it's not going to be sufficient for you, certainly. So think about that. If you have to, hopefully it's a fairly small investment, but invest in a simple laptop just to get yourself started. And you'll see the difference very quickly between using a phone or a tablet and using something like a laptop to trade. So these are just a few basic areas. There are going to be quite a few more, certainly. I think, if this video does well, I'll certainly do a second part. We'll cover some more areas from my experience working with traders over the years, where they struggle. But these are some of the really key ones, I think. Now, if you have any questions based on what we've gone through, or maybe you'd like to know how we trade a little bit more, there's a link in the chat below just to go through with one of our team, have a chat about how our trading system works, have a chat about how we help our traders as well, and see if we can help you, essentially. For anything else, though, if you've got any suggestions on videos, absolutely drop them in the comments below. I'll be happy to cover a topic there. And other than that, I hope to see you on the next video.